Yeah, thanks a lot for coming. I was going to talk about mortgages, but actually, just following up from Senator Byrne, I have a few questions. What do you think about the Trichet letter? Do you think it's appropriate for the ECB to be sending letters like the letter to Ireland, like the letter to Italy, demanding policy change with a threat of loss of ELA or the buying of bonds?
I could get into this area, Deputy, but I'd appeal to the Cathaoirleach on this point. I think that these matters will be discussed in great detail by the other committee in a very short period of time. And I sort of feel it's out of the scope of this committee, and I'm really rather reluctant to go off in a half-baked sort of way without careful preparation and without a context. I could give answers, but I just don't think it's the most fruitful way to proceed at the moment on that. I mean, Senator Byrne was particularly exercised on the question of should the ECB come to it, and I went down that road to some extent, but I don't want to get lured further down, if you don't mind.
Okay. You did answer his questions. Okay, go back to mortgages. In terms of the new mortgage recommendations, do you have an estimate over those mortgages that are currently outstanding? Roughly what percentage of those that have gotten mortgages in the last whatever would have qualified under the new recommendations?
Yes, I do. Somewhere. I know, as I said at the beginning, that I left some of my papers behind, but I have, from memory, I have some information, even if I don't have the exact table that I'm really looking for here. Broadly speaking, this is really a nuisance because I did have a super table here which had all the stuff, and I'll be able to send some along to you. It's very, very annoying. In any event, I had exactly the answer to that question, but it's not in any of these things. And
if you send the information to the
I will, Senator. It will affect some.
Yes.
So, for example, there were about 10,000 mortgages given out in this is now from memory, I hope it's right, in 2013. And about 2,800 of them were to first-time buyers in excess of 80%.
Okay.
Now, only if we followed exactly the template that was set out there, 15% of the mortgages. So it would be of the value of the mortgages, but let's so instead of 2,800, you could have 1,500. Also, there was in addition a small number of movers mortgages were in excess of 80%.
How come you have those figures? Because the banks, all of the banks, refused to answer that question. They said it wasn't possible to answer the question.
Each of the banks will not want to tell. They won't want to tell you because their competitors will know them. But the central bank has all of the information, stirs it up, and since they can give it out, they can't. None of them can tell. There's enough banks.
But they all suggested to the committee that they weren't not telling, but they suggested it wasn't simply possible to work out such a thing because of this factor and that factor.
It is quite possible that they haven't used those from in their their management information. We didn't ask them, give us that number, but we have a considerable deal of information because of what we've been, more intrusive into the banks. We have a lot of information, and we've processed that in order to be able to discover those things.
Is that an effective admission that a percentage of those mortgages are effectively unsustainable?
No. No. What it says is that if the banks continued to lend on that basis, and as time went on, that would not just be the new business, but would be the pattern of their overall business as years go on, they would be in a situation where they would be vulnerable to a downturn in the economy as a whole, because too many of those would start to go bad.
Okay, and what impact do you think the recommendations will have on rental prices?
So this is a difficult question to answer. There's a certain amount of residential property here. Some of it would shift to being sold for, if it was in rental, could be sold, and vice versa. So there are not that many in the Dublin area, not that many empty rental properties, as we all know. So if somebody has to stay a little longer in the rental property because they're not buying a house, it's not clear that that's going to change the situation all that much.
Is there not a danger that rents could go up on the basis that the market becomes even less liquid, which is the reason that people are being forced into the rental sector, but also that ownership becomes concentrated in a smaller number of hands, because it's not more expensive to have a mortgage, it's simply more difficult to access a mortgage, which benefits those who are institutional investors, etc.
By pouring less credit into the demand side of the housing market as a whole, it seems likely that it will lower everything, both where house prices are going and where rentals are going. I'm not saying it'll bring them down from where they are, but from where they're going. The problem with analysing this thing is, what's the other side of the market? What is the construction side? And would there be a response of construction? I don't think so. I think the delays in getting construction going and underway are rather independent of the credit system. I mean, builders do worry about availability of credit for them in the process of building, but I think that's only a small part of the supply.
Okay, just in terms of one of your responses, you mentioned that the Central Bank recently updated the sustainability guidelines to include guidance on instances in which sustainable solutions may extend into the borrower's retirement. I mean, does that mean that mortgage arrears follow people basically until their grave? I mean, a situation where people have 35, 40-year mortgages, where a number of them, a high percentage, are coming off interest only at this stage. But what does that mean in practice in terms of people, what is deemed to be sustainable, how long does it go on for, and what it means?
People who don't want to leave their house and simply because some bank had a rule thinking that, oh no, the whole thing has to be completely paid off by age 65 or something like that, or age 70. They don't want to move. I don't think we should bar them from extending their contract into retirement to allow them to do what they want to do. I think that's a safe thing to do and a sustainable thing to do. It's not the ideal. It's not the ideal. No, I don't think see it like that. I think it's their choice. That's what they want to do. If the alternative is that they have to leave the house and go down to something that's not where they want to live, and if that's possible, I think it should work.
Thank you. Deputy